While everyone is chasing Nvidia at $200 and Broadcom at over $250, something interesting is happening in a completely different part of the market. 5 stocks, all under $5, all with real AI technology, all with real revenue, and all with the kind of upside that large caps simply cannot offer at this stage of the cycle. Here is the truth most investment channels will not tell you. The biggest returns in any technology wave never come from the companies everyone is already talking about. They come from the companies building the infrastructure, the tools, and the platforms that the giants depend on. And right now, 5 of those companies are sitting under $5, while most investors are not paying attention. Nvidia was under $5 once. The investors who found it then turned every $1,000 into over $40,000 today. Right now, 5 AI stocks are sitting at exactly that price range, and most investors are walking right past them. I went through hundreds of companies to build this list. The criteria was simple: real revenue, real AI technology, real analyst conviction, and a price under $5 that gives you genuine upside without requiring the business to become the next Nvidia. If you want to find opportunities before the crowd does, hit that subscribe button right now. This is the kind of research most investors never bother to do. Here is what we are covering. 5 stocks, all under $5. One is an AI medical imaging company that just got FDA clearance for a tool trained on 21 million images. One is the only AI drug discovery company with $754 million in cash and 5 clinical programs advancing simultaneously. One is a green hydrogen company that just beat revenue estimates and returned to positive gross margins. One is a cloud storage company built specifically for the AI data explosion, with a 27% EBITDA margin. And one is an AI commerce platform with a $13 analyst price target trading under $3. I'm saving the most asymmetric opportunity for last. Let's get into it. Stock number 1. Butterfly Network, ticker BFLY, current price around $4. Most people look at Butterfly Network and see a small medical device company nobody has heard of. That reaction is exactly why this opportunity exists. Here is the reframe. Butterfly Network is not a hardware company. It is an AI imaging platform that happens to deliver its technology through a handheld device the size of an electric razor. And 3 days ago, it reported numbers that should have made every serious investor stop and pay attention. Butterfly Network reported Q1 2026 revenue of $26.5 million, up 25% year-over-year, with gross margin expanding to 68.9%. The company reaffirmed full-year 2026 revenue guidance of $117 to $121 million, representing 20 to 24% growth. And here is the catalyst that most people completely missed. Butterfly just received FDA clearance for a fully automated AI gestational age tool trained on over 21 million images that can assess fetal age in under 2 minutes. The clearance positions Butterfly to expand maternal health access in low-resource settings globally, supported in part by a Gates Foundation grant. Think about what that means. FDA-cleared AI running on a handheld device, Gates Foundation backing, and a licensing business called Butterfly Embedded that is signing new partners and generating recurring revenue. Butterfly Embedded signed its 9th partner and anticipates additional partnerships, expanding its ultrasound technology into new markets, including pharma, robotics, surgical robotics, and wearables. Here is my concern. Insiders sold $4.9 million worth of shares over the past 3 months, indicating some caution among company executives. That is a signal worth watching. My takeaway: 25% revenue growth, 69% gross margin, $138 million in cash, FDA-cleared AI, Gates Foundation backing, 9 licensing partners, all at $4 per share. Butterfly Network is one of the cleanest AI healthcare setups under $5 in the market. This is a buy. Now let's move to something completely different, because this next stock is using AI to do something that has never been done before in human history. Stock number 2, Recursion Pharmaceuticals, ticker RXRX, current price around $3. Most people look at Recursion and see a biotech company burning cash with no products on the market. They are looking at the wrong metrics entirely. Here is the reframe. Recursion is not a drug company. It is an AI operating system for biology. The company runs automated laboratories that generate millions of biological data points every single week, feeds them into machine learning models, and uses that intelligence to identify drug candidates at a speed and scale that no human team could ever match. Recursion stock offers 100% upside potential based on its one-year median analyst price target of $7, supported by moderately bullish consensus sentiment. And here is the number that tells the real story. Recursion ended the year with $754 million in cash, providing runway into early 2028 without needing additional financing. $754 million for a company trading at a $3 stock price. That cash position alone is worth more than the entire market cap implies. Recursion has delivered the first clinical validation of its full-stack AI operating system in FAP, demonstrating translation from AI-driven biological insight to meaningful patient outcomes. The company has 4 clinical programs advancing with 5 partnership milestones achieved. Here is my honest concern. Share dilution and accelerating cash burn threaten shareholder value with at least 18 to 24 months before potential pipeline revenue and likely further capital raises. This is not a stock for investors who need short-term results. My takeaway: $3, $754 million in cash, 4 clinical programs advancing, AI platform featured at Nvidia GTC, and 100% analyst upside to $7. For investors with a 2 to 3 year horizon, Recursion is one of the most asymmetric bets under $5 in the entire biotech sector. Strong buy. Drop a comment right now. Had you heard of Recursion Pharmaceuticals before today? This is exactly the kind of company most investors walk right past. Let's keep going. Stock number 3, Plug Power, ticker PLUG. Current price around $2.50. I know what you're thinking. Plug Power is an energy company, not an AI stock. And you are right. So let me tell you exactly why it is on this list. Here is the reframe. AI data centers are consuming electricity at a rate that is breaking the power grid. Microsoft's CEO recently said the company has large quantities of GPUs sitting idle because there are not enough data centers to plug them into. And the data centers that do exist are running out of power capacity. Hydrogen fuel cells solve exactly that problem. Reliable, scalable, clean backup power for AI infrastructure. And Plug Power builds the entire ecosystem from start to finish. The numbers just got a lot more interesting. Plug Power reported Q4 revenue of $225.2 million, beating consensus estimates. And management described 2025 as a pivotal commercial inflection point, driven by Project Quantum Leap, a comprehensive operational transformation focused on cost reduction and margin improvement. Here is the most important development for investors. Plug Power returned to positive gross margins. For a company where profitability has been the central concern, that is not a minor detail. That is the inflection point the market has been waiting for. Here is my concern. Plug Power carries significant execution risk. The hydrogen economy is still developing, and the timeline for mass adoption of fuel cells in AI infrastructure remains uncertain. This is strictly for investors who can hold through volatility. My takeaway: $2.50 with positive gross margins for the first time, revenue beating estimates, and direct exposure to the AI infrastructure power problem that nobody else is solving at scale. For investors who believe in the hydrogen thesis, this is a buy at current prices under $5. Here is where it gets really interesting. The next two stocks are not in healthcare or energy. They are pure AI infrastructure plays. And I think both of them are dramatically underpriced. Stock number 4, Backblaze, ticker BLZE. Current price around $3.60. Most investors dismiss Backblaze as a commodity cloud storage company competing against Amazon and Google. That is the wrong frame entirely. Here is the reframe. Backblaze is not competing against AWS for enterprise cloud contracts. It is building the cost-effective storage infrastructure that AI companies need and cannot afford to run on hyperscaler pricing. Every AI company training models needs massive amounts of storage. And every AI company operating on a budget is looking for alternatives to paying Amazon 3 times the market rate. The profitability numbers are exceptional for a company under $5. Backblaze reported a record adjusted EBITDA margin of 27.6% in the fourth quarter. That is not a startup burning cash, hoping to find a business model. That is a real operating business, generating meaningful margins at $3.60 per share. Oppenheimer maintains an outperform rating with an $8.50 price target, implying over 130% upside from current levels. The firm highlighted improving margins and operational execution as the primary drivers of that conviction. Here is my concern. Revenue growth has been uneven, and some analysts have downgraded the stock due to inconsistent top-line performance. The business is real, but the growth rate needs to accelerate for the thesis to fully play out. My takeaway: $3.60, 27% EBITDA margins, Oppenheimer price target of 8.50, implying 130% upside, and direct exposure to AI data storage demand that grows every single quarter. This is a strong buy for patient investors looking for real profitability under $5. One more stock to go, and I genuinely believe this is the most asymmetric setup on this entire list, because the analyst has a price target that implies over 300% upside from current levels. Stock number 5, Resolve AI, ticker RZLV. Current price around $2.88. This is the one most people are going to look at and say they have never heard of it. And that reaction is exactly why the opportunity exists. Here is the reframe. Resolve AI is not a traditional retailer or payments company. It is an AI commerce infrastructure platform that sits between consumers and brands, using generative AI to turn passive browsing into active buying. Think of it as the invisible AI layer that makes online shopping actually work the way retailers want it to. The analyst conviction here is extraordinary. Alliance Global maintains a buy rating with a $13 price target. That implies over 350% upside from a stock currently sitting under $3. And here is the acquisition that changes the entire investment thesis. Resolve AI just closed the purchase of Reward Loyalty UK for $230 million, adding a profitable recurring revenue stream and a proven loyalty platform to its existing AI commerce technology. Management described the combination as a closed-loop ecosystem, connecting discovery, engagement, transaction, and loyalty into a single platform. Here is my concern. This is an early-stage company executing a complex integration while operating in an intensely competitive market against well-funded players. The path from current revenue to the $13 analyst target requires flawless execution and strong market adoption. My takeaway: $2.88, a $13 analyst price target, an AI commerce platform with a loyalty acquisition generating real revenue, and 350% upside if the thesis plays out. This is the highest risk and highest reward position on this list. Size it accordingly. Let me bring this all together. 5 stocks all under $5. 5 completely different AI businesses. 5 different reasons the market is dramatically underpricing them right now. If Nvidia was one of these 5 stocks at $4, which one would it be? That is the question I want you to think about after watching this video. If I had to rank all 5 by conviction for new money today, here is exactly how I see it. Number 1 is Butterfly Network. Fresh earnings beat, FDA-cleared AI, Gates Foundation backing, and 9 licensing partners at $4 per share. Number 2 is Recursion Pharmaceuticals. $754 million in cash at $3 with 4 clinical programs and 100% analyst upside. Number 3 is Backblaze. 27% EBITDA margins and 130% analyst upside at $360. Number 4 is Resolve AI. 350% analyst upside is extraordinary, but execution risk is the highest. Number 5 is Plug Power. The hydrogen infrastructure thesis is compelling, but the timeline is the longest. Here is the investing truth I want to leave you with today. Nvidia was under $5 once. Nobody was talking about it. Nobody was making YouTube videos about it. The crowd was looking somewhere else entirely. Right now, 5 AI stocks are sitting at exactly that price range. The crowd is looking somewhere else. You are not. That is the difference between investors who find opportunities early and investors who find them after they have already moved. You just did the work most investors will never do. Use that knowledge. Disagree with any of my picks? Tell me in the comments. Which one would you buy first? Which one do you think is the next Nvidia? Subscribe for weekly research on where the real opportunities are hiding. No sponsors, no fluff, just the analysis. See you in the next one.